Tesla cannot catch a break, eh? Like every quarter, there's something not right with Tesla recently. It's just been ridiculous. Right now in Q1, we just got the delivery report, the delivery and production report, and Tesla has delivered, well, first produced 433,000, a little bit more than that, and delivered, get this guys, delivered 386,810. Surprising everybody because everybody was above 400,000, and anything below 400,000 was a little bit of a shocker. And you know what? I had it with Tesla. I'm done with Tesla. It's time to sell all my shares and, buy something that will probably last for a long time, like Lucid or something. Maybe even Nikola, because I am done with Tesla. I'm done with Tesla, man. That's it. Every quarter keeps freaking, damn it. Come on, guys. You guys already know me. Of course, I'm not going to sell and go all in on Nikola. I mean, that's just ridiculous. In fact, I bought more this morning when I was doing the live stream. If you guys missed out, that was a really fun live stream. It was down with 5% because on this news, and I bought. I think I'm over 800 shares of Tesla stock right now, and I'm going to continue to buy. But here's the thing, guys. Yeah, deliveries were below 400,000, and to me, it's a little bit. Am I upset? A little bit. I'm more in a shocked disappointment because below 400,000. But we got to look at why though. So they produced 433,000, a little bit over that, and they delivered almost 387,000 vehicles. That's a delivery rate of 89%. Usually Tesla is above 95%. So why is it this time they're below 90% delivery rate? What I think, and I think this is pretty much on the money, is there's a lot of delays with their ships, being delivered to the country, because we all know what's happening in the Red Sea. There's a lot of supply chain issues. So I do think that's why. Otherwise, I do think we could have had 95% delivery rate at least, and we would have been over 410,000 in vehicle deliveries for this quarter. But nonetheless, as a long-term investor, this quarter, next quarter, it does not matter. And if we go ahead and read what they said here, they dropped some interesting bombshell that we should that we should pay attention to, that we shouldn't ignore. All right, check this out. In the first quarter, we produced over 433,000 vehicles and delivered approximately 387,000 vehicles. We deployed, here's the part, guys, here's the part. We deployed over 4,000 megawatt per hour of energy storage products in Q1, the highest quarterly development yet. This really opens up a lot of doors, and we can now see and now predict what the EPS would be for Tesla in Q1, because we got the deliveries and we know what the energy is going to be because they just gave it to us. So that is a sheesh moment. Second paragraph here is decline in volumes was partially due to the early phase of production ramp of the updated Model 3 at our Fairmont factory and factory shutdowns resulting from shipping diversions, as we spoke about shipping diversions, which is why they have a 98% delivery rate and not a 95% delivery rate, caused by the Red Sea conflict and an erosion attack on Gigafactory Berlin. So these are the reasons why, and we see April 23rd here being the earning Q1 day, which you guys better mark your calendars because we're going to go live there as well. So let's jump into what we can expect what the stock price could be after Q1 once the earnings come out, because I know right now we're in like the low or mid 160s, but after the Q1 report, the stock will reevaluate itself at that time. So let's see what the stock would be then. Smash that like button if you guys haven't already. And subscribe, man. Come on. I totally forgot to do that in the intro. But anyways, let's get down to it. So here's the stock price prediction chart on a quarterly basis. If you guys want access to this chart, you guys can through my Patreon here. All you got to do is add the vehicle deliveries, and you can adjust whatever you guys want, and you guys can get the revenue, income from operations, the net income non-GAAP, and the EPSs and the PE, whatever you guys think is the PE is right, and look at the stock price. So let's start off with Q1. It was 386,810 vehicles. Before I click enter, I did reduce some stuff. If we look back at the production and delivery report, there was a 2% leasing. Now 2% on 386 is actually less than we expected. So I brought down the leasing from 400 to 350. Maybe it'll be even lower, but I brought it down to that. I brought vehicle gross margins down to 16%. Now, this could be more. I did put a 16.8%, but that's because I had 100,000 more vehicles than what we have now. So I brought it down to 16% because COGS are still working. They're going lower. And they didn't decrease prices this year compared to this quarter, compared to other quarters. They actually increased some of them. So, I think leaving at 16% is being conservative and fair at the same time. Energy here, as you guys can see, I had it here at 1.7 billion, but we know that each megawatt that Tesla does or sells is about 411,000. So they just gave us the number there. We got just at 1.7 billion, a little bit below that, a little bit over 1.6 billion. So that's really good. And I gave it a 23% in profits, around just below $400 million. So that's not bad. I brought the operating costs down to 2.3 billion, taxes of 150 million, other income interests, like, the bundle of cash in a high savings account or a high interest account, making 300 million this quarter. This could be less. This one could be less. So I'm not too sure. We will see. Stock-based compensation of 500 and shares outstanding of over 3.5 billion. Let's see what the revenue and profits would be. And let's see what the EPS will be, because right now it's gonna go lower. They're saying 60 cents right now, Wall Street. So I think it's gonna go lower, but nonetheless, let's go. Let's click that. Bam, look at that. Total revenue of $21.3 billion for the entire quarter. We have income from operations almost 1.5, net income gap of 1.6, and non-GAAP of 2.1, 60 cents non-GAAP, and GAAP of 46 cents. So right now it is 60 cents, but it's going to go lower. However, though, will they make $300 million in interest income? So maybe not, maybe 200. If that's the case, then 57 cents. Maybe they'll make only 100. That'll be 54 cents. But let's keep it at 60 cents because, you can only speculate so much. And this is not my final. My final will be a couple days right before the Q1 earnings. Now, what would the stock price would be? All right, that's the thing. What would the stock price be at that time around there? Obviously, this is just all a prediction, not facts. Right now, the PE is around 38, which is insane for a company like Tesla. But 38 PE, which will be the stock price around 165. If you give it the same 38 PE, that's a stock price of 156. Literally at the 500 billion mark. And that's if they met what it is right now, right? This could go lower to 35, guys. Maybe even a 30 PE around 124. Now, will it? I still think the lowest it can go is around 140. And that's the lowest until, Q2 is going to be a much better quarter than Q1. That's for sure. Whether it's full self-driving or earnings or deliveries, whatever it is, it's going to be much better. So it's hard to see it to be that low, but we could potentially see a 35 PE, and I'm going to leave it at that, 144. The best I can see is a 50 PE around 206, which I don't think is going to happen unless we get some surprising news, right? Like interest rate cut or something, but I don't think that's the case. The lowest, a 25 PE, a 25 PE would be, a 24 PE would be around 99 or $100 per share. Some are calling a 69, which would be literally an 18, 15, 16, 17 PE, which doesn't make any sense. It does not make sense. That's why I'm going to leave it at 35 PE. I think we're fair. In Q2, however, I do see a big jump to 475,000 vehicles. And yes, all the average selling prices are 43. And you guys can see, by the way, in Q1, 6.8% operating margin. If this actually happens, 6.8%, yeah, maybe a 30 PE would make sense. But anyways, 35 PE, keeping it conservative in Q1 and Q2. 475,000 vehicles being delivered. I have 17% here for gross profits because vehicle gross profits because, economy of scale, costs are going lower. We get total GAAP gross margin of 18.2%. So in Q1, it's maintaining Q4, which is good. If we're maintaining it, the company is, in terms of growth wise, it's maintaining, not going down. Just the operating margin is down, which that's also a big deal. But as you guys can see in Q2, 8.2%. So it doesn't really matter that much. We get a 75 cents in EPS. If we give it the same 35 PE, that's $135 per share, just because we're getting diluted shares. I don't think so. I think because we are in a profitability, operating margin comes better than expected. I could see a 50 PE being the 192s. I can see that happening in Q3. In Q2, in Q3, again, keeping the average selling price the same, increasing the vehicle gross profits to 17.5%. I expect 525,000 vehicles being delivered. It may seem high, but I don't think so. I think in 2 quarters from now, you can't sell over 500,000. I'm sure you can. That would be a total revenue in that quarter almost reaching $29 billion. Net income gap of $2.5 billion. Non-gap of $3 billion. Operating margin of 8.9%. We can see energy making some good gains, $2.5 billion in revenue and almost $600 million in profits, 18.5% in total gap gross margin. So that is a big, that's going up in terms of profitability. So that's really good in terms of the business. We get an EPS of 86 cents. And I do think because we're literally 1 year away from the compact car and other interesting things, if we do give it the same PS50, it's 201. But I do see it being around the 60 PEs, maybe 55 PEs at least around the 2025, 2021, around there. I do see sentiment coming back if these numbers become true. Now, in Q4, what will Q4 be? I'm thinking around 575,000 vehicles being delivered because Q4 is a strong quarter. And by then, we should have some sort of a, price cut. Unless Trump gets elected and something else happens. But I don't know. I don't think Trump has much of a, big effect. That only on the PE, I do think, but not in the actual vehicle deliveries. 575,000 vehicles being delivered, 17.8% for vehicle gross profits. Total gap gross margin of 18.7%. Look at the energy, $3 billion and almost $700 million in profits. So the growth is there for that. For energy, the growth is absolutely there. We have operating margin of 9.2%. We have an EPS of almost $1. So if this happens, guys, and you guys can see the EPS fiscally, it takes a nosedive in Q4, but that's because in Q4 of 2023, we had the tax inheritance that Tesla had. So really the PE will jump up big time. And I would say around the 75 PE, more than that, actually, around the 85, more than that. I think we could probably potentially see 100 PE of around 260, which is funny. If this happened, that's my old price target for 2023, and we did hit that. So it'd be interesting if we hit the same thing. Now, 110 would make sense around the 280s. I do think that would be the case. I mean, again, this would be around June 21st of 2025 to April 2025, because that's when Q4 earnings comes out. My price target is 350 by when Q4 ends, right? That would be a stock price, a PE of 135, exactly, 1.1 trillion. Will that happen? I don't know. I don't know if that'll happen or not, but this is all a prediction and a prediction. That is all. I do see 100 PE, maybe at the lowest 90 PE happening by end of year. I do see that happening if these numbers become true. But let's see what will happen. This quarter was not a good quarter when it comes to deliveries. The stock market has been reactive. I mean, down 5%, 6%. This should tell you a lot. This should tell you, but this is only short term, guys. What matters is the long term, and I made a video about it over here. You guys can check it out. And obviously, it's a prediction, not facts, but y'all won't be disappointed. I'm pretty sure in 2030, if we zoom to 2030 and look back in today, we'll go like, wow, what a buying opportunity it was. That's all I'm going to say. Check the video out, guys. Guys, get here. I bought the dip t-shirt. I'm wearing one right now because this is the dip. This is the dip. Subscribe, and I shall see you guys in the next video. See ya.